start, Garth, with your thoughts on what we're seeing happening today. A broad-based asset sell-off across the equity environment and the commodity environment. Even gold, as I was saying to Riet just a moment ago, not being able to come forward with that safe haven status. This is tantamount to panic selling across the board, would you say, or is that a little heavy-handed on my front?
I think you may describe the action in the treasuries market as being a little bit panicky. But generally speaking, across the board, I would say that it's not panic. I think for me, areas that have been a little bit crowded, gold, one of them, a favorite trade. Equities having gone up on all the quantitative easing and just an excess amount of liquidity looking to buy assets. So it makes sense to me, given that there's a little bit of concern and that we're seeing a retracement in treasuries, which was a big sentiment driver, which also reversed for people to take profits that they've had, enjoy the run that they've had if they've been lucky enough to make money. And as we go into year end and given the uncertainties in Europe, I think people are just re-evaluating and being a lot more defensive. But I wouldn't say it's yet panic.
A healthy sell-off, how about that? A healthy correction?
Yeah, it's a very healthy correction. I mean, we've had a huge rise in the equity market, particularly in the past few weeks. I mean, here we are, what, 4% below our all-time high of May 2008. So yeah, I think it's to be expected. I'm a bit more optimistic. I think we're going to see a pretty nice run up into the year end. I've seen it on a few occasions before over the past 20, 30 years. And I suspect we're going to get it again for the simple reason that it's a case of no hiding place. I mean, there's an awful lot of liquidity sloshing around the world with nowhere really to go.
But what about those problems in Europe now surfacing again? And of course, we've still got on the table the foreclosures in the US that could absolutely wreak havoc with that economy.
I think the US is probably more germane. But I mean, if you look at Ireland, it's an economy of what, $250 billion, it's nothing. It's the banks that are in there, yes, of course, if they default, they've got a problem. I don't really see any possibility, frankly, of a default there, or in Greece. They've got enough of a safety net, if necessary, to come and actually get the money to pay them off. So, you know, they're going to have to go through major austerity. The Irish and the Greeks have been living way beyond their means for decades, and now it's payback time. It's as simple as that. And I think the Irish, I don't know about so much the Greeks, but the Irish certainly realise that.
Garth, do you agree there with Chris that generally we tend to see a rally in markets towards year end?
Yes, and in South Africa, our bond market rallies hard in January after the December break, the fact that we haven't had any auctions from National Treasury. And I agree, I'm not so pessimistic on the globe. I think it's got its problems, certainly in the developed world. I think austerity measures need to be taken place. But in terms of emerging markets, I'm still constructive. And although we're seeing asset selling off in the developed world, I think all that Europe's doing, and admittedly Ireland is small, all it's going to do is bring more global savings to countries like South Africa, Brazil, etc.
But isn't that why we could potentially call equity environments across the emerging market space, and I know that's a broad statement to put them all in one grouping, but that we could be heading to relatively frothy environments in equity markets and other asset classes with foreigners searching for yield, which has been the theme for so long now?
I think long term those are the risks. I think that as excess liquidity chases assets, bubbles develop. But I think the bubbles can expand and I think they can get better. And I think that disciplined emerging markets that have shown prudent management and been responsible in terms of managing deficits, debt to GDP ratios, they can be beneficiaries of this global capital, and I think that they can create capacity. I think South Africa is situated in a perfect situation to make use of this global savings and to use it to recapitalize South Africa while the rand is strong.
And talking about this emerging market story, obviously we've also got the concern that the Chinese government is going to move in quite strongly to continue to cool that economy, specifically after we saw inflation coming in at 4.4%. And that's the other concern, because China has been such a big part of the growth story going forward as the US falls by the wayside.
Yeah. Look, I think we shouldn't get too carried away with that either. I mean, the Chinese need 7.5% to 8% just to make sure you don't have widespread social unrest. And the further they go down that growth curve, you know, the more acute that potential problem becomes. But I think a lot of people are also ignoring India. I mean, there's another big economy that this year is probably going to record double-digit growth as well. So, you know, I think the emerging market side of things has really got an awful lot of steam left in it.
Interestingly, on the currency front, what we're seeing today is in line with the sell-off on equities and commodities. We're seeing the rand, which is generally a barometer of risk, trading weaker against the pound and also the euro and, of course, the US dollar. We're at 7.04 on dollar rand. Do you believe that this is a more sustainable level, or is this just a short-term blip in the consistent rand strength story that we've seen for a long time?
I think it's a healthy correction. I think that the rand has always been one of those currencies that has been very open and had a large speculative interest in it. I think that as we approach the Monetary Policy Committee meeting, the case for a rate cut opens, and potentially the risk of 50, maybe even 100, I've heard, coming through would cause some speculators to potentially short the rand.
Do you think, what is your House view on the interest rate decision?
Our House view is for 50 points this meeting.
But it's not impossible, as you say, for us to see 100 basis points coming off.
Nothing's impossible, but I wouldn't bet my money on it.
And Chris, your House view in line with what we're seeing?
Similar House. And yeah, I mean, 50. I just think the Reserve Bank's going to be very cautious in this. The last thing they want to do is drop rates by 100 and then a few months down the track have to start raising them again. So yeah, I think 50 at this point in time.
Very quickly looking at the broader equity environment and whether you think sustainable in South Africa, close to that 32,000 point level. A number of players agree with you, saying we're going to see that rally towards year end, and I've heard 35,000 on the table. Of course, this is now crystal ball gazing. It's very difficult to give an indication of where you think, but could that rally push us through the previous high is really what I'm asking.
I think that corporate South Africa generally has deleveraged. I think there's a lot of cash sitting on their balance sheets. I think that dividend policies are going to determine where equity prices go.
Chris, just your view on that point?
In a word, yes. And look, I've been very bullish. I said 36,000 by end of the year. And look,
36,000. I haven't heard that. You know, I'm going to hold you to that.
Yeah, well,
every time you come into the studio until the end of December.
Paul Theron and I were on one of your competitor programs, and we said that back in January. And look, it's quite possible. It's probably unlikely, but it's possible. But I think we're starting to see an awful lot of really great news coming out of certain areas, like the retailers, for example. You know, until a few weeks ago, I don't think anybody would have thought Mr. Price would have come in with a 57% increase in earnings. JD Group would have done what it did. You know, it's gathering momentum. And we're only in my opinion, the early stages of a nice turnaround in